The live trading session is underway, and as we look at the charts right this second, Bitfarms Ltd is trading at exactly 3.49 CAD, pushing up by 0.070 points, which translates to a solid 2.05% intraday gain. If you are watching the ticker, you are seeing green on the screen. But do not let that simple percentage fool you into thinking this is a standard day of trading for a Bitcoin miner. The price action we are witnessing right now is not just a reflection of the spot price of Bitcoin. It is a signal of a much deeper, more structural shift occurring within the company's boardroom and its power grids. Most retail investors logging into their accounts today are expecting to see a direct correlation. Bitcoin goes up, Bitfarms goes up. That is the expectation. The reality, however, is far more complex and significantly more volatile. What we are actually seeing is a company that is currently caught in the crosshairs of a massive industry consolidation phase, fighting off hostile takeover attempts while simultaneously pivoting its entire business model toward high-performance computing. You are not just buying a miner anymore, you are buying a distressed infrastructure asset that is rapidly trying to rebrand itself before it gets swallowed whole by a larger predator. This tension between being a pure-play miner and an AI infrastructure target is what is driving the volume you see on the tape today. To understand why this stock is moving the way it is, we have to strip away the surface-level narrative that Bitfarms is just a proxy for Bitcoin. If you open your Fidelity mobile app or check the charts on your Interactive Brokers trading platform, you might see the sector tag Digital Assets. But that fails to capture the nuance of what is happening on the ground in Quebec, Paraguay, and the United States. The market is currently pricing in a survival premium. Following the Bitcoin halving event earlier this year, the economics of mining changed overnight. The block reward was cut in half, meaning revenue for the same amount of work dropped by 50%. The expectation was that high-cost miners would capitulate and go bankrupt. Bitfarms, however, did not capitulate. Instead, they became the target of one of the most aggressive corporate battles we have seen in the crypto space, specifically involving Riot Platforms. This is where the story gets interesting for the individual investor. When you place a trade on Bitfarms stock today, you are essentially stepping into a ring where institutional giants are throwing punches. Riot Platforms, a massive competitor, accumulated a significant stake in Bitfarms and made a hostile bid to take over the company. Bitfarms responded with a poison pill shareholder rights plan to dilute any entity trying to acquire more than 15% of the company without board approval. This corporate drama created a floor for the stock price for months as the market speculated on a buyout premium. While that specific conflict has seen a settlement with changes to the board, the volatility residue remains. The 2.05% move you see today is partially the market digesting the new strategic direction under the revamped leadership and the realization that Bitfarms is determined to remain independent, or at least demand a much higher price tag if they are to be sold. Let's investigate the liquidity and volume flow we are seeing today. If you are using SoFi Invest or a similar investing site to track real-time volume, you will notice that the buying pressure is not entirely uniform. It is sporadic, indicating algorithmic trading bots reacting to micro-movements in the Bitcoin spot price, but also long-term accumulation by funds that are betting on the infrastructure thesis. This thesis suggests that the value of Bitfarms lies not in the Bitcoin it holds, but in the megawatts of power capacity it controls. In a world where AI data centers are starving for power, Bitfarms' massive hydroelectric power contracts in Canada and South America are essentially gold mines. This is why we are seeing a decoupling effect. In previous cycles, if Bitcoin dropped 1%, Bitfarms might drop 3%. Today, we often see Bitcoin trade flat while Bitfarms grinds higher, as we are seeing with this 2.05% gain. This is the market beginning to value the power portfolio separately from the mining portfolio. For the average person using Schwab Intelligent Portfolios or looking for investment help, this distinction is crucial. You are not just betting on the currency, you are betting on the grid. Now, we need to address the elephant in the room, the recent operational updates and earnings data that have set the stage for today's price action. The company has been aggressively upgrading its fleet, retiring older, less efficient miners, and plugging in the new T21 units. However, this transition has not been without friction. There have been delays and underperformance issues with some of the newer machines, which forced the company to revise its year-end hash rate targets. In the stock market, uncertainty usually is punished severely, yet the stock is holding up. Why? Because the market is forward-looking. Investors are looking past the temporary efficiency drag and focusing on the massive expansion into the United States, particularly with the acquisition of Stronghold Digital Mining. This move was a strategic masterstroke to gain access to the PJM energy grid in Pennsylvania. By acquiring Stronghold, Bitfarms effectively diversified its regulatory risk. Previously, they were heavily exposed to Argentina and Canada. Now they have a solid foothold in the U.S. energy market, which is more predictable and offers opportunities for those high-margin HPC and AI contracts we mentioned earlier. If you are managing your own funds through a Fidelity brokerage account or engaging in self-investing, you have to weigh this geographic diversification heavily. It reduces the risk of a single government shutting down their operations overnight, a fear that has plagued the stock in the past regarding its South American operations.